All right, let's dive a little bit deeper into the action with our markets reporters. Abigail, why don't you get us started?
Well, Romaine, as you all are talking about, it is the end of the quarter. Let's take a look at what's happening on a cross-asset class basis. Some are calling it the everything rally. Take a look at the S&P 500, up 4.5% over the last 3 months. Bitcoin surging up 208%, its best quarter since 2017. Gold and the 10-year yield both rallying the most since 2016. Of course, the 10-year yield trading opposite to price. So that tells you bonds are rallying. So you have risk assets and you also have safe haven assets rallying at the same time. One asset that is not rallying, though, the dollar. The dollar down the worst, more than 1% on both the month and the quarter. This is a monthly chart, Sarah. And over the last few years in the monthly range, you see that it's really been stuck in a range between the buyers and the sellers. That's been more so true through 2018 and 2019. And while the dollar index is below its 200-day moving average, take a look at that, clinging to that 50-month moving average, suggesting that you could continue to see this range go on. Maybe even the dollar bounces higher. It'll be interesting to see, of course, what comes out of the G20, Sarah.
Thanks, Abigail. Well, it's not only end of the second quarter, but it's also this end of the second half. So if you add together the first quarter, the second quarter, put it all together, also pretty much everything is still in the green. So you look on a half-year basis, and we're still getting the everything rally from stocks to bonds to commodities. There you can see it. So you have crude oil really leading the way, up 30% so far this year. Then you have the S&P 500 up more than 17%. But you also have global stocks. You have European stocks. You see gold there. You also see high yield credit, investment grade credit, and then, of course, treasuries as well. But if we bring it back to stocks, the S&P 500 has now surpassed Wall Street strategists' year-end target of 29.12. However, there is reason to think that we could still end there, because in the past, when we have seen really strong first half rallies, we have never seen a match. And not only because it's hard to imagine getting a 17% gain in the second half as well, but because 4 of the 5 times we saw the strongest first half rallies, we also saw declines. So with the G20 meeting this weekend, payrolls next week, and then also another Fed meeting next month, we should get some hints as to where we are going forward.